Welcome to What's in Store with Carly and Chris, the show where we cover hot topics at the cross section of retail and real estate. I'm Carly Iacono, and I'm joined by my co-host, Chris Ressa. Chris, good morning.
Good
How are
morning.
you today?
Good.
Nice to see you.
Yes.
I feel like we are right in the middle of intense real estate conferences and event season. Does it feel to you like they always cluster together?
Yes, for
I don't know
sure.
why that is. Spring and fall.
Spring for sure.
and fall,
Yeah.
back-to-back events. It's a lot.
Yeah.
It's good.
Yeah.
Good thing we're social people.
I missed one that I wanted to go to, but yeah.
Well, because you have to pick and choose
Yeah.
eventually, right? Or you
Yeah.
could be out and going to these all the time. So we both attended a pretty interesting one last night called the Real Estate Gala.
Yes.
I think that was the official name.
Yes.
Right? So the first black tie event I've been to in a while. It was fun to get dressed up. I don't know how you feel about it, but nice to don the gown and be fancy for a night. I think the event was sponsored by Crexy, Placer, Trip, Bob Knackle, and
Strip mall guy.
Strip Mall Guy. Yeah. And if we missed any sponsors, sorry.
Yes.
I think we got the big ones. So what did you think of the event last night?
I thought it was an interesting event. It brings across the country. I was surprised by how many people were from out of town.
I felt like more than were local.
Yeah.
Actually. People flew in from Canada, from other countries. It was wild to me.
A lot of people from out of town.
Yep.
It's it's a lot of what I'll call the non-institutional real estate investors,
Mhm.
and which is interesting because being part of ICSC, I'm typically, connecting with people who are on the larger company institutional investor side. So this was an interesting change for me because it's a significant amount of, really successful entrepreneurs and real estate investors that are on the non-institutional side, which was a lot of new people for me to meet last night.
It was more new people than I was expecting. And then I realized that more people were out of town than we thought. And a lot were not in retail real estate or single tenant, right? They covered all asset types.
Yeah, they were all asset types.
Tech people. It was really an interesting
But I met some
cross-section.
interesting folks. Like I met someone who owned 4 grocery stores, so that was really interesting.
Always good conversation.
Yeah, there was some franchisees I met, some developers, interesting things they're doing, connecting on ideas. Overall, it was impressive, the event that they were able to put together for sure.
Really, really neat.
Emmett Smith was there.
Oh, right.
Yeah,
Right.
yeah.
There's a few famous people.
Yeah, there was a few.
Comedians,
Yeah.
football players.
Yeah. Quarterback
it was-
Mike Glennon was there. It was pretty cool.
That's who it was.
Yes.
So I have a quick funny story on that before we actually dive into the content today. So I was speaking to a group of people, and I think that Mike was there, and they said, he invests in real estate now, but what do you think he did before? Not following sports all that closely. Okay, I watch him when I need to. I had absolutely no idea who he was, none. And they said, what do you think his career was before? And he's not a huge guy. And I said, off the cuff, pilot. I said, I think he was a pilot. And everybody went, what? And where did that come from? And I was like, I don't know. It's the first thing that came to mind. And he was not. He was a quarterback. So I'm not really sure
Really nice guy. Really
how
good,
well he took
cool
that.
guy.
But
So yeah,
no, everybody laughed. And that was my brush with fame.
it was a really. It was a good event. It was the first time I was there. I know it was the 3rd one they've had, but
Yep.
I thought it was a cool event.
I thought so too. So nice change of pace and good to meet some new people. And we are about to head to ICSC Las Vegas, our what I call Super Bowl of the year, right? 5 days of madness.
Yes.
But I'm excited. I feel like this year the booths are still important. We still have meetings every half hour, which is great, but more and more people are coming in on Friday or Saturday. And I have meetings starting Saturday in addition to all the events and dinners and so forth. So what's your schedule look like?
It's pretty jam-packed.
Yeah.
I am pretty booked from Saturday, Sunday through, and then we do our company dinner on Tuesday.
Nice.
So I think it should be, I'm pretty excited. There's every company that I would hope would be attending is attending. So pretty excited.
It's an amazing event. 25,000 people each year.
Yes.
So Always really interesting. So for today's show, we're going to cover 3 things that are going to dominate our conversations, and not just us, but 3 themes that we think will be extremely prevalent during ICSC. And maybe we'll recap after the show and decide if we were right.
Yeah.
Exactly. And what other little nuggets we get out of it. But 3 topics that everybody's talking about now and we think will carry through. So the first one is something we're all really tired of talking about, but need to keep talking about, and that is the effect of tariffs. And what's interesting, I think, about the tariff conversation, one is that it's changing every day. So, it's the amount, the time of implications. You can have this conversation over and over, and it's different because it's evolving. But 2, the perception of how crucial it is varies widely in my conversations. Some investors are saying tariffs are going to very quickly and very materially affect the financial performance of certain tenants, and we are now putting a significant risk premium on certain deals. And then other people are saying, we're going to work around this. We'll find other sources, like it's business as usual. So what's your thought on how tariffs are going to impact your meetings at ICSC?
Over the last 3 weeks, I've talked to a significant amount of retailers leading up to the ICSC, real estate directors, managers, heads of real estate. And I would say going into this, I have a pretty positive outlook because most of the retailers are, charging through and sticking to expansion plans and continuing to focus on their strategic plans. No one is ignoring tariffs, but I would say that, they've learned, a lot of the retailers know how to navigate volatility, no matter what the source of the volatility is. Notwithstanding that, the supply chains for a lot of these retailers have improved significantly.
They've diversified.
They've diversified across, many different places, and they navigated it through the first time this administration was in office.
Right.
And then, a lot of retailers and I think larger businesses had been game planning, in 2024, a strategy pending on which administration won the election, because they were both, talking about what they were going to do.
Right.
Potentially if the Democrats had won, there might have been higher corporate taxes. There could have been other things, and so they were planning for that. And so I'm encouraged by the positivity by a lot of retailers, and we'll see what actually happens. Nobody knows, right? If anyone, the scary thing is when someone's like has certainty around what they're saying, because
around anything right now.
Yeah, and because
you gotta question it.
At the end of the day, you are seeing extremes in opinion of the impacts of what is going to happen.
Yeah.
So I'm encouraged by that. I think the tariffs are. I think landlords will probably ask retailers about how it's impacting them and question it more than retailers actually bring it up to landlords. I think, a lot of retailers are going to make deals and, continue their expansion plans. So yeah. I've been pretty encouraged about what I've been hearing leading up to the show.
And if you're not looking at it from the tenant perspective, you're looking at it from the investor perspective. So a lot of our calls have been, we watched the earning, or we heard the earnings, saw the reports. A lot of the earnings for retailers are down. A lot of earnings for companies in general are down this quarter. It's earnings week. So we've been on a lot of calls. And then the conversation inevitably goes to, well, their earnings were already down, or they missed expectations. This is before tariffs have really taken hold. What comes next? So there's a lot of anxiety, I think, from the investor side about how it will affect retailers. And that's why I think the conversations are so important, because you're speaking direct to the retailers, where I'm speaking direct to the owners. And we need to get that conversation to be circular, to where the retailers are really saying, maybe we missed expectations, but here's our projection, and it's not doom and gloom, right? We're still expanding despite that.
So I think like if you're buying like in a piece of real estate and with a 20-year lease, and how much should the next 2 quarters impact your investment decision?
Well, I think number one, there's very few 20-year leases anymore.
Okay, 10-year lease.
Okay, so we cut it in half. And then two, it's not just the next few quarters, because I don't think anyone thinks that tariffs are transitory. I think if they're in place, we've got at least 3.5 years of them, and we'll see what happens with the next administration and which way that goes. But does that materially impact their margins, their business plan longer term? Is it a shift, or is it just a blip of profitability in the near term? And I don't think, unless you're in those companies, unless you're connected to the retailers on an operational level, that you know the answer. And that's what everyone's hoping to uncover. And potentially these conversations at ICSC give some light to that.
So, but just to unpack that a little bit. So I feel like it's more of a binary question. Like, are they saying what they must be saying is that the tariffs are going to be like, because when you're buying that piece of real estate, you're buying into the concept that they're going to be there for the term of the lease, potentially longer. So is that to say that people think this is going to be a catalyst? Some of the investors are thinking this will be a catalyst for store closures?
I think in certain categories, potentially, right? Some segments of retail are more affected, or I guess have more exposure to tariffs. There's been a lot of conversation in the drugstore space, because not just the actual finished drugs, but there are molecules that we can only get, learned a lot about this recently, through certain countries that we don't have created, that are necessary to even create the generic version of drugs. So there's just a lot of complexity, I think, with the supply chain for certain categories of retail that might have more effects long term. So TBD. I'm not saying it's just part of the conversation now, that as an investor, should I put in a greater risk premium?
So
my
pricing,
offer,
so
right?
pricing, so pricing's different. If we're going to talk about pricing because you want to protect some potential downside, that makes sense to me. But the total extreme, I'm not so sure about.
And I think it goes back to what we touched on other episodes, that there's a heightened focus, as there should be, on real estate fundamentals, in addition to tenant financials and tenant performance. Like, if it's good real estate and you believe in the tenant, nobody knows where we'll be in 10 years, honestly, the pace of change right now. But that is your hedge, right? Before, it was 5 years ago, 10 years ago, the conversation was, what does the tenant corporate financial, P&L look like, or balance sheet? And that's what we're investing in from a security perspective. So I think we're going back to actual real estate as a key piece. So it's going to be a lot of our conversations.
Nonetheless, when it comes to Vegas, tariffs going to be a big discussion, clearly.
Huge on both sides.
Yeah.
Absolutely. All right. So the second thing we're expecting to hear a lot about is artificial intelligence. And this one I think is fascinating, because if we rewind a year ago, we were like, oh, AI is coming, right? It's going to affect all of us. Let's start learning. And if you don't start learning, you're going to be left behind. And now I feel, I don't know if you would agree, that everybody is using it, every company, every individual, in some way. And they're trying to figure out what tools benefit them, how to use it, what the trust level is. Do we implement this on a wide scale for corporations, which a lot of them are? Do we use it for daily workflow? Like, how do we fit these tools in? And they seem to be improving and changing daily. So that, again, is another conversation that everyone's trying to figure out how it will change workflow and also investment decisions.
Yeah. I think everyone's trying to figure out, and what'll dominate some conversations is, how are you using it?
Yep.
How's your company using it? Who are you connected with that's helping you build this, or who sold you that, and what's this, and then I think the discussion around, should I be a first mover in this,
Right.
or should I be a late, fast follower, I think is always the discussion around this. What I hope, what I really hope, as we got into the 2000s and all these different, and the prop tech and all these other softwares, everyone built something like around these niches.
Right.
Right. And, they all solved a problem, but it's all this, a new software and onboarding, and you wake up and you could have, 300 different software systems doing 300 different things. If that's what happens with AI, that would be unfortunate. There needs to be more consolidation. And I think that's why that's one of the reasons you're seeing like all these companies build their own.
Right.
So it can do more than just one thing, like we have with some of these software platforms that are like really focused, narrow niche space. And that's good to execute on whatever you're trying to do. But if it doesn't talk to all the other things, and you have to have, a new software program for all these things, it's inefficient. So I think there's going to be a lot of talk of how are people using AI in their business. It's definitely something that comes up all the time in my conversations now, and I think it's going to continue to come up in conversations.
There's a lot of fragmentation, to your point. I don't even know how many subscriptions right now, just trying to understand what's out there from a real estate perspective and how people are using it in workflow. And everything is very niche specific, except for like Gemini and ChatGPT and some of the, broad models, I guess. And that's been one of my concerns / frustrations, that you learn one tool, one software, one subscription, but then it's not great or as good as this other thing for this other workflow. So I know CBRE, we have 2 internal AI models that are really interesting and complex. And, we have our security around them so we can use them for certain workflow and not have any risk of compliance issues or, private information going out into the ether, the globe. So I think a lot of companies are trying to solve that piece too. Like, what do they do internally to make sure the data and their proprietary information is protected, but also make their employees efficient? And then people personally are saying, well, what can I use to make my life, maybe personal tasks, maybe some business tasks, more efficient? How does all that kind of go together? So I think if we could find, or I know this is in the works, an AI that talks to the other AIs, and then we're just saying, here's the task. Like, you go figure out all the best tools to do it and just let me know when you're done. Like, that's the next step.
Yeah.
And maybe next year, that's what we'll have. But right now, it's how do we figure out all these different pieces and not make it slower to get the work done?
Yeah.
Right? Because now it feels slower sometimes.
Yeah.
And then I also wonder about the validity of the output we're still checking, right? So we don't use AI for anything that is, has true business consequence right now, right? So we're not excerpting leases using AI without checking every single thing, right? It's just not efficient. So we're still doing most tasks manually because we don't trust the output yet. I'll give you a quick, very simple example. I asked ChatGPT to draw an outline of my garden that I want to plant this summer. Here's what I need to solve for. We have groundhogs and bunnies and chipmunks, so it has to be has deterrent plants. I want these sorts of vegetables. How do I lay this out in the most efficient way? And send me a picture diagram, right? So it gives me all the things I need to think about. And then it sends me a picture labeled, all the plants labeled, and they were all labeled wrong. So the marigolds labeled tomato and the tomatoes labeled basil, everything was all mixed up. And if I didn't know what a tomato was, I'd be like, oh, okay, let me go look for this, right? This is what a tomato is, if I believed it. But I know what a tomato looks like, and it wasn't it. And I kept telling it, this is not correct. Please relabel. You have this wrong. Please label. 15 iterations, never got the plant labels right. And there are only 5 plants pictures. So that kind of exercise, I think, gives me pause on where we are right now on AI. Not that it's not going to be different in a year, but I think right now we're in this learn, but you still have to be very cautious with the output.
So, for personal, I think generally speaking, I found the validity of the output a little more trustworthy than at scale and general. Like, there's obviously mistakes. I think one of the things that I'm learning is how you speak to it matters. Like, what you say and how specific you are and how you word it impacts the response significantly. So
that's very true.
Yeah.
Very true. And the last thing I want to touch on in AI before we move to our third point is I think we're going to have more conversations, and we might differ on this a little bit, on how it's going to be used for site selection for retailers. I've been reading that a lot of retailers now have their own internal AIs, like a lot of companies do, and that's kind of guiding their algorithms for selecting sites. But then there's caution against overutilizing it and maybe discounting a site that the AI doesn't think is valid that maybe would work, right? So there's still a need for local market knowledge, hyper local market knowledge, right? So do you think we get to a point where AI is just ubiquitous and it's the screening tool that all these companies are using for highest performing sites, and that misses opportunity in secondary and tertiary markets? I feel like we could render perhaps some retail obsolete that maybe shouldn't be. Or you're not worried about that yet?
No.
Okay. So you think AI and site selection is just going to have everything be kind of cruising along and decision-making will stay consistent?
I mean, we've had a significant amount of tools over the years. So I don't know if you know Stuckey's, right?
Yeah.
So she came on my podcast a couple of years ago and talked about, how her grandfather did site selection.
Okay. Give me a quick recap. How do you do it?
So I'm going to tell you.
Okay.
I'm going to tell you. So are you familiar with Stuckey's is? It's like this convenience, like rest stoppy type place. They're very big on pecan log rolls.
That I didn't know. Okay. Sounds delicious.
So he was in the South. So he would he went to his store. He would get a large cup of coffee. He would drink the cup of coffee, and then he would drive. And when he had to go to the bathroom, that's where the next location went.
Wow.
So, and they're still here today and doing pretty well. And so that's amazing, right? So I think you can have, and anyone in retail real estate will tell us, you can have a lot of precision around site selection through data, but I don't see it moving the concept that there's art and science to it. And so I think it'll improve site selection. I'm not just like, I think there was a lot of talk around what location analytics would do to site selection. Mm-hmm. And I think maybe it's enhanced it. I think the negative consequences around AI and site selection, I'm not so sure about. I don't know that there's going to be significant, maybe there will, but I'm not sure there's going to be significant negative consequences, because I think that there's a strong belief in the art and science around site selection.
What about smaller retailers that don't have the same tools? So of course, they could get a Placer subscription. They can get some of these that are more widely available. But do you think they're going to be at an increasing disadvantage because they don't have the same level of AI tools, or it's not going to affect them? They can use the coffee method.
So, I think that sometimes the scrappy and small with less because they're closer to it, their motivation is potentially higher, can, in certain instances, be more nimble and beat some of the big. And so
that's their competitive advantage already.
And I don't think that's going to, if you're asleep at the wheel, you're asleep at the wheel. But if you're paying attention, I think that you're going to be okay.
All right, good. Let's move on to our third one, and that is supply and demand in the market. And this is really a tale of two different sides of the business. So we have retail leasing, and then we have capital markets, which, as you like to say, one side is lollipops and rainbows, and one side is perhaps a little more challenging at the moment. So what conversations are you expecting to have regarding supply and demand metrics?
So I think the supply and demand is still significantly tilted toward the landlord and the owner of the real estate. I think that's proven by when you see these bankruptcies and you see the amount of leases that get bought in the bankruptcy. It's a way they could access real estate that they couldn't access it. They have to wait for this other retailer to go away in order to get there because there's no available space. Because of construction costs, capital markets, and there's still not a significant construction pipeline of retail, and to that end, there's continued expansion of retailers, and therefore the supply and demand is still,
very tight.
Very tight. Mm-hmm. And I see that retailers are going to continue to be creative to access real estate. And I think there's going to be talk about supply and demand, but I think people are continuing to be surprised, even with some of these, disruptions of bankruptcy, that supply is still constrained. Like, the reality is we've had some Joannes and a lot of them are spoken for already.
Wow. Those are interesting conversations, I'm sure, as a landlord, as if the retailers continue to try to be creative, right? You're like, I have this space, maybe it doesn't fit, but perhaps in the past you wouldn't have met with certain retailers because it didn't fit their prototype. And now it's like everyone wants to meet with you, even if it means changing their model a little bit because they have to be adaptive. So
sure,
it's probably a pretty fun seat to be in from your perspective.
For sure.
Yeah, nice. Yeah. So from the capital markets perspective, we're looking at rising inventory levels in certain segments of the market and very supply constrained market dynamics with other sort of asset types within retail. So, certain things are growing in a bit more challenge, discount space or drugstore space. Deals are still getting done, but there's more inventory coming on market. And then a lot of our national tenants that are trying to expand and can't because of construction costs and all the reasons that we know things are difficult to pencil, those new developments are getting snapped up often before they even hit market, right? At very aggressive cap rates. I mean, we're still putting things under contract at 5.5 cap rates, 5.55, like right in that mid-5 range, which is very aggressive considering rates are still in the high 6s. And then we have other things, in more, I guess, assets that have a risk premium on them that are trading in the high 7s, few things going into the 8s, the 9s. So it's an interesting split in the market with where the demand is and where people perceive risk. Because a lot of times, as you know, it's not what the data says so much as what the perception of risk is in the market that drives activity. And right now we're juggling a lot of questions, I guess, about certain business segments and what that means for the future and balancing that with underlying real estate.
I'll be interested to see new concepts, like, and to see what happens and what people are talking about from a new concept perspective. not just new businesses. New businesses are different than like what I would say new concepts. Like I recently did a LinkedIn post on, standalone vet pharmacies.
Right.
You've talked about a lot. Like, what's the next triple net concept that can scale nationally, right?
I don't know that we need one of those on every corner.
Yeah,
but you're going to need one in driving distance. That's a nice idea.
I remember you were talking about like, are vets going to be like this?
Right.
It still hasn't taken off.
Right.
To that, to that like coffee.
Right.
But we'll see. So that's another thing I'll be interested to see. That's always a topic of conversation is new concepts.
And I know Tractor Supply just bought a vet.
That's the one I was talking about. Yeah.
Which I think is a really smart partnership.
So
nice. Well, look forward to seeing you out in Vegas.
Sure.
I know it promises to be a whirlwind, but fantastic show. So thanks for sharing what you think your meetings will be about. And
yeah, same to you.
Feel the same. And we will recap in a few weeks.
Yes.
I hope it's a great show.
Same.
To everyone listening, that was this episode of What's in Store with Carly and Chris. We're so happy you joined us, and we look forward to seeing you again very soon. Have a great day, everyone.
Take care.